Righty. Hey, good morning. It's 7:30 a.m. New York time, London lunch. It's Wednesday. Remember, trading kitty cat on Wednesday, oil inventories later. But in any case, it's Wednesday, February 2015. This is your daily Forex trader strategies session. My name is Wayne McDonald. I'm the chief FX market strategist. Been trading currencies for over 10 years. This session is brought to you by Traders Way. Today we're going to cover, I think we're going to do yens. We're going to leave off from yesterday, right? We're going to do some yens, and then we'll try to cover some of the other markets like energies, metals, indices, so on and so forth. Don't forget, not only is today Wednesday and oil inventories come out at 10:30 New York time, but also it's FOMC day. Well, at least the meeting minutes, right? So this is going to be a very important day. That's why we want to do things technically, identify levels of support and resistance, look at them on a little bit higher time frames, and then maybe catch the market out of position a little bit after the news event, right? Simple event-driven strategies. Let's get this party started, huh? Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, does not predict future results. Never risk money you cannot afford to lose. Hoo-ha! All right, well, let's start with the Aussie yen. Let's take a look at a higher time frame. Generally up or generally down? I suppose it's the frame you look at, right? On the daily chart, it's overbought at resistance, okay, near the central pivot point. On the monthly, near the reversal pivot profit zone on the weekly. Okay. Roll reversal area is basically up in here. If you base them off of these wicks, oops, then it's not far off from the pivot profit zone. Let's get rid of that one. That's fine. Okay, that's on the daily, right? So this could take a while to roll over on a smaller time frame, but I think if you were a bear, you could set that up, couldn't you? And be and have an ambush ready at this higher elevation. Now, what if you want to sell Aussie, but you don't want to sell yen? Or, sorry, you want to sell Aussie, but you don't want to buy yen? What do you do? If Aussie yen is set fall, is there something else that could fall more easily? Hey, good eye, Joseph. How will you? Anything else? Come on, guys. Hello. Euro, Aussie. No. You're not getting it. No. Well, I'm bearish on both Euro and Aussie, so that's a bad one. Euro yen. No, you're not getting it. The answer I'm looking for is sell Aussie dollar. Okay, the question, what if I want to sell the Aussie, but I don't want to buy the yen? Well, sell the Aussie, buy the US dollar. So you set it up here and say, well, you know, at least at a basic level, it's going to respect the prevailing trend of Aussie weakness. But I'd much rather hold US dollars than hold a bunch of yen. Okay, as far as fundamentals are concerned. Okay. So anyways, that looks like that could be set up, right? So let's go through the process. Are we at resistance? Again, pivot profit zone for the week, 21 EMA on the day. Monthly, roll reversal, and a little higher is just as fine. Doesn't matter to me, none. So it's plausible to think short. That's on a daily. What about today? What about tomorrow? Well, same sort of thing. 4 hours ready to drop. 1 hour is ready to rise. Short-term long to long-term short. What do you stink? Smell like a plan? How about buy it up and drop it down? Maybe even get some divergence. Wouldn't that be sweet? Well, what if, let's do, how about another scenario? What if it kind of just moves sideways until FOMC meeting minutes are released and it goes, You catch the market mispriced. Okay, so that's why you got to ask whether you're a bull or a bear now. On the hourly chart, it's pretty bullish. The oscillator's more oversold than overbought, right? Certainly not overbought. It's even below the 50% line here on the oscillator. It's made a higher high relative to this, right? Come on. Drawing tool problems. Let's try this again. That'll work. Okay, seems like there's a slope here, right? So that's made a higher high. So what do you typically do when price is made a higher high? Fibonacci. Leonardo Fibonacci, right? Maybe we get a pullback. I'm also looking at the roll reversal in here. So that could be a Bazzone. Lots of Italian today, huh? Where's the Bazzone? It's just above a Fibonacci. So anyways, depends on how aggressive you are. That's how I'd line things up. Term long to long-term short. So Oren says he's looking to sell USD yen, which is fine today, which is fine if you think there's going to be dollar weakness. It comes down to what you want to hold. I mean, are you fundamentally bearish on the US dollar? If the answer is no, but you do want to sell USD yen, then I bet you there's something even better to sell with a yen on the right. That's where like maybe a euro yen or this Aussie yen, for example. Depends on what your fundamental bias is. Ideally, your long-term technicals and your long-term fundamentals are congruent. Okay. There's a range from before. Okay, that's kind of putting things into context. Does that make sense? So it could even do this, which is fine by me, right? Because we're just using this as resistance. This is resistance. So your oscillator would diverge, and then like that, right? Yeah, sure. Why not, Oren? Remember, it always comes down to central banking policy. Oren asks, can pound dollar go up another 100 pips? Sure. Absolutely. Why not? It's all about central banking policy. Everything is, including that move. So what's going on? And remember, we talked about last week that you got to get ready for the British pound. Carney spoke. Inflation data is pathetic in the UK. Why? Give me one logical reason. Oil. Yeah, just like everywhere else in the world. Oil crashed by 70%. Of course CPI is down. Of course inflation is dead. It's dead everywhere for the same reason. Now, some people have other reasons, but certainly oil has impacted it. So if oil recovers and stabilizes, let's say around $75 instead of $50, then inflation levels will kick in again. And that's what Carney's saying. He's like, look, the job market's improving. Things are improving here. We're getting bad CPI data. They're one-offs. So he tells you. Are they dovish or hawkish? Well, he's a lot more hawkish. Boom, buy the British pound. That's it. That's all there is to it. I'd like to make it more complicated, but it's not. Bear in mind, this was preceded by about a month of consolidation, right? So anyways, going back to Aussie, that could be interesting. Okay. So again, if we have an event that's volatile, which we will later today, you could get price way out of position. This could spike up, go 150 pips up, way up here, have no business up here, and then you sell it. Jam a stop, take a walk. Okay. The beast. No, let's do CAD yen first. Sorry about that. Get you all excited. Did you get tingly right there when I said the beast? Okay, kitty cat. Well, before we do kitty cat, why don't we flip over and look at oil? By the way, all you guys have at least demo accounts at tradersway.com. Have you logged into their binary options platform and practiced with their binary? Fantastic way to get you exposure to the commodities market. Binary.tradersway.com. Check it out. Also, you'll notice on your MT4 account that over here you see that you have West Texas Intermediate Crude that you could trade here. Oh, snap! Right? But you also have oil, right, in binary dollars. Oil binary options, I should say. Sorry, I can't think and talk at the same time. So at least track the market. So today we have oil inventory. So at 10:30, the government will release inventories of oil. If inventories have grown, then oil prices generally fall. If inventories have fallen, and usually this is because of demand, right? So if demand is increased, they've drawn down inventories, prices go up. So it's not usually a supply issue, it's a demand issue. But as you know, supplies have increased as well, right? So anyways, so that could have a pretty important impact on the Canadian dollar for two reasons. One, they produce a lot of oil, and two, they are right next door to the United States of America. Okay, so anyways, you might want to watch the oil market today. So here we are. Oil made it almost to what? Almost $54. Triple top. What you want to do? Okay. Well, you can see here old reversal. And check this out. So you can see that was a pretty classic purchase, right? Pretty classic buying opportunity, wasn't it? It's the same way we trade Forex. Then it made a 100% drop after a double top. So now what? You go into range bound. Do you use Fibonacci retracement? No. Well, you would have here, but you thought it was going to make a higher high. That's called a trend trade. But it wimped out at the double top and dropped, fell down, made a double bottom. So what do you do immediately there? Trade with oscillators. So you buy at the bottom, you be more bottom-ish. Okay. And you continue the trend trading, or sorry, the range trading strategy until it breaks. You don't have to break it. Don't worry about it. Oh, I'm sorry, Yark. Really, was it pushed off because of the holiday? I appreciate that, Yark. He says oil inventories are delayed tomorrow. Mucho gracias, señor. Muy bien. But anyway, it's still important. So, okay. Play the range until it breaks. So, an example of a break, let's breaks down. Breaks, makes a lower low outside the range, let it retrace, and then drop it like it's hot. Okay? Yeah, you see roll reversal off this. We probably had this marked up. I don't quite remember it. But it reminds me of. All right, so anyways, yeah, it looks like we probably had that marked up. So pretty simple stuff, right? I really encourage you to take advantage of trading with your binaries and with the CFDs. Get into the intermarket analysis. So for example, you could trade gold and oil, and you could trade it through currencies if you want. For example, Australia used to have a really strong correlation to gold, so you could just trade Australian dollar, basically get gold moves, but enjoy the higher leverage and earn interest, which gold obviously doesn't pay you. Plus, I like trading gold in the morning. Okay? So, and in fact, here's the funny thing. So we're looking at oil now. I used to trade oil exclusively at the close of pit trading between 2 and 2:30. So a half an hour a day, I would trade oil futures. And I like to trade gold at the open. Be done within a half an hour to an hour worth of trading. How many people like trading gold? Okay, how about a different question? How many people would like to trade gold? Yeah. How many people can figure out, if you weren't here, but you see my chart as it is, how many people can figure out what my general bias was for gold recently based on just this chart? Does that look tradable to you? Why, yes, at the open. So it's an event-driven strategy, just like I like to scalp the S&P 500 open. It's a front-running strategy. So within, 10 to 20 minutes before the market open, I like to put in my trade, jam a stop, let the volatility of the open, right? The assumed or implied volatility and volume that comes in of the market, let it carry my position like a wave carries a surfer, and exit at solid support or resistance. And I usually find if I can stay in the trade for about an hour, this is for both gold and oil, that I can catch about 70% of the average daily range. Yeah. How many people are interested in that type of information? Jim says, do you straddle? No, no, no. And I really don't. I really don't like that strategy. Okay. To me, straddling, I don't know. Well, I won't poo-poo on other people's strategies. What I would like you to have, Jim, would be your bias, and you trade in the direction of that bias. Or it's just a pure volatility play. You happen to be at resistance, market's overbought, the market's going to open. All right, so you sell it at resistance and hope it carries you. Okay? Yeah. Versus someone that says, I'm going to straddle, I'm going to be long and short because I can't make up my mind. But anyways, I don't mean to bag on other people's strategies. Okay. So like, for example, in my humble opinion, the right way to use binary options is to either use them to scalp, because now you don't have to worry about risk management. And even if you're only right 1 pip, you might get paid 30 pips. It's not too bad when you're scalping, right? Right? Or to buy into a bullish trend when the market is technically bearish. You're fundamentally bullish, market technically bearish, but you're at hardcore support. You just can't turn away. You just buy it. You want to hedge your risk. Okay? Now, when options were created, when they were invented to reduce risk. They weren't necessarily created as a speculative tool for profit. Okay? So that's the way I look at it. Now you can get them very, very complicated stuff, but I just like plain vanilla type strategies where I'm either using it just purely to hedge a cash position, or I'm using it just to take out volatility out of my scalp, and I sell at resistance, I buy at support. If I'm right, I get paid. If I'm right a little bit, I get paid the full thing. If I'm right a lot, I still get paid the full thing. It doesn't matter. So it's nice to scalp. The reason I say it's nice to scalp is, let's say traditionally when people think of scalping, they think of taking out 5-10 pips at a time. I think it's the hardest way you could possibly work, but some people love the personal torture, right? But think of it, if you're going to pull out 7 pips, you're going to have to make at least 10 pips because you have to come for the spread and stuff, right? But with a binary option, that may not necessarily be true because everything's already priced in, and you just have to be right 1 pip. 1 pip, 100 pips, 1,000 pips, it doesn't matter. You're going to get paid the same amount. So you don't have to be like pretty right or mostly right. You just have to be not wrong. So I tend to kind of like that, and that's one sort of speculative play for using binary. You know, just buy a 15-minute binary long off support and take a walk. Okay. Or have you ever considered using it as a swing trade? Let's say an hour before the London Open. Here, let me let's do this in a different way. Sorry to get off track. I hope you don't mind when I get off track. Okay, let's say this is the Asian session. Okay, and the Asian session's been up all day, and here we are. The London session's about to open. I would probably look to sell this if that were the case. Don't pay attention to the price or the pair. Just if Asia was, I call this an Asia fade. So if Asia's been long all night, one thing I always remind myself is when the London boys get into the office with their little black tea and cream, they're going to look at this and say, "Wow, price is high. Price has risen all night." So what do traders do, guys? Buy high or sell high. If they didn't see prices elevated over the last 8 or 10 hours, they sell high. That's it. Boom. Woo, complicated. Right? So I might look to sell that. So one way you might put like a like a 2 or 4 hour binary short. Now the binary, there's a positive and a negative to it, but they balance each other like everything should. The upside to it is even if you're 500 pips wrong because something crazy happened in the market, you don't lose any more money. So you don't need a stop loss. It doesn't matter. It's all built in. Huh. Well, that's not bad. The downside to that is you also have limited profitability. That's also built in. But you could just say, well, the London market's going to open fairly soon. Price is quite elevated. We're at resistance, midpoint psych level, pivot point, blah, 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 blah. You want this to go down. So you just throw it down and say, well, as long as it's lower than this in 3 hours or 4 hours, depending on the time you choose, right? Then you'll get paid and you just take a walk. Don't even need to stop. Done. And you treat it like a swing trade. Okay? And now you can sleep. And this is really good for those in the United States of America because London opens at 3 a.m., right? So what do you do when it's 1:30 a.m. and your eyes are burning because you're so tired? Right? Throw down a 4-hour binary and go to bed. Knowing, and you'll be able to sleep, knowing if you're wrong, you already know what you'll lose. You're not going to wake up and find your 200 pips in the hole. Oh! Okay? All right. Sorry. Yeah, you just choose your price, Kareem. Choose the time when you want it to expire. If you're 1 pip right, you get paid everything. Okay, can you see what's going on here? This is the 786. This is the Fibonacci retracement after the low. We're working our way up to this zone. Got to go out 4 hour or even a daily, I guess. Neato, huh? Yeah, it kind of had to go up there or it's a long ways down. I'm not saying it can't go down. It probably could go down fairly soon, and if it does, it's a long ways down. But what would that tell you? Oil would collapse. Think oil's going to go to 25 bucks? Okay. Then this is a buying opportunity. Okay. Okay, what about it technically though? On a daily chart, okay, you are in a risk zone, my friend. This whole area here off of this and then yeah. So I would at least maybe look for like that and slingshot your way this, okay? If you think oil is bottomed out at 44, which was one of our targets, wasn't it? I had two targets, 44 and 4250. It bottomed out at 44. Okay. So if you think we've bottomed out at 4 and we're much more like 60 than 40, then you want to buy the Canadian dollar. Do you want to buy it off the top Bollinger Band when it's overbought? No, probably not. So look for a retracement. Okay. I would mark up this area. Okay. Looks like dollar's gaining strength. Very nice. I'm very happy for that. I'm watching it on my other charts. Just seeing, is there anything else going on? Let's see. Why do you think the CAD yen reversed today? Could it possibly be the weekly pivot profit zone? Or do you think it's just a random walk? The reason I ask you this, and I hope you actually think about it when I ask you a question, yen strength. It's funny. I remember when I was studying for my CTA test 1,000 years ago, they had a young trader came in and he had to take the test because he was just hired by some bank, some finance company, right? And he's in there, and they gave him like 2 days of study, and they're like, take the series 3, right? Take the series 3, bang it out, come on, and whatever. He was the type of guy that he would just sit down there, study it, and take the series 3 the next day and get back to the office, right? And so I'm like, so what do you trade? And he says, we'll trade anything as long as there's somebody on the other side. We don't care what it is. We don't care what the price is. We don't care about anything. As long as as long as you'll take the other side, we'll do it. Right? So Sharon's like, yen strength. I think about it like there's a lot of traders out there like they didn't even look at what the pair was. They're just like, pivot profit zone, sell it. There's weakness in there. Traders are thinking about taking profit. They're jamming their stops close. Sell it. That's all they care about. Pure technicians, right? Anyways, and then they're like, oh, that's yen? Oh, yeah, well, we'll do it by the end of the day. It doesn't matter. So anyways, what I'm actually asking is, do you think it's a random walk or people making decisions based on technical analysis? If the answer is technical analysis, then you can plan on them behaving logically again. Okay? right? What are they going to do on the 4-hour? Can you predict the future? That could be a very interesting. Now, if we hadn't had a shortened week, it'd be Tuesday. And if we were Tuesday, we would have been here if it was the same price. And if it was a normal week, actually be predicting the weekly central. But it's a short holiday week. Remember, Monday, the markets are closed in the United States due to President's Day. And also, it's an odd week. FOMC meeting minutes are being released, so that could jolt the market. So I'm not ready to say that. But let me share a rule of thumb. If you hit the pivot profit zone early in the week, and I usually make it within the first 54 hours, then very often you'll go back and retest the central pivot point. Either touch it or break it, I don't know, but very often that occurs. I just notice, like, yeah, it's Wednesday, but really to a lot of people it's Tuesday, the second trading day, right? So maybe we like that, but and follow the oscillator. Who knows? Next, Euro. What do you think? Feels range bound to me. I think it's similar to how I looked at Euro USD yesterday. I want to sell it, but the conditions are not amazing. I feel like I'm shopping hungry, you know? What happens is you end up throwing down a bunch of trades on a mediocre trade, on a mediocre pair, and other things start moving and you have no dry powder left. Excuse me. Right? So I don't know. It's just I look at it and yeah, you could throw down a trade here. I don't really want to buy the yen though. And it's funny. There's a lot, a lot of volume that goes into euro, and I'm a bear on the euro. It's just, conditions are not that great. So it looks range bound to me. What I'd rather see is a trend, right? Is it trending? No. So do I have to trade it then? No. So whatever. Are we at resistance? Yeah. Monthly central pivot point, so on and so forth. Daily wants to fall. It's worth a shot, but that's a daily chart. I mean, I could pick this up tomorrow and it would change very little, right? But notice the monthly central pivot and the daily oscillator. Okay? And now if it a lower high because of that, then the projection would be a lower low, which would be the bottom of the pivot profit zone on the weekly pivots, which would, probably stretch out to hit the monthly M2, then it would retrace, and then to make another lower low. So yeah, maybe. The beautiful thing about a trend is you don't have to be in on the first wave, right? Catch it on expansion wave 3. Lovely, tell your mum. The beast. Okay. Let's try to figure out what the trade plan was. Now, first of all, was that correct? I said let it break out, catch the pullback, and then long and gone. Well, moderately, right? But what's the lesson? What can we learn from this? Did it break out? Yeah, it did break out. Did it pull back? You know what? It did pull back. Look to this wick, to that wick. Did it extend? It did extend. Did it respect the gray zone? Yeah, on the pullback it did. Boop, 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 boop. Look at the target if I do this. That's pretty good, isn't it? So, all right. Do we discuss this so Wayne can get a pat on the back? No. There's no glory in Forex. Nobody cares. But does it mean it's predictable? If it's predictable, it's tradable, isn't it? Does anybody remember doing this? Marking this up when it was consolidating? And what was the message? You don't need to be on the first wave. You don't need to be the one that breaks the range. Let it break, trade the pullback. Long and gone. Right? So, have you learned? Have you learned from it? Was it teachable? And did you learn? Because we covered this like I just did on the euro, and I don't know if people get it. So should you be watching when we create ranges like this? Should you set alarms or watch for breakouts? Should you mark it up on the chart? Should you print out the chart and write breakout and every few hours come back to check the market? Are you going to? Looks easy now, doesn't it? Well, it was easy then. But look how clearly we have it marked up. It's coming down, it's coming down, it's coming down, it's coming down. Consolidate, 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 consolidate. Breakout, pull back, long and gone. That is actually a very technical reversal. In my book, How Do I Describe a Reversal in the Forex Market? How many people know how the Forex market reverses? Like an old... And that's it here. We have some moves here, and it's trending down. Does it immediately reverse? No. It consolidates. It gives you tons of time, man. It gave you days to prepare for this. DeBeasta says J-Lo. Yeah, you can call this a J-Lo. Often I'll call it a J-Lo if it consolidates for a very long time and then up. The J-Lo is a big wide bottom. Very similar. Oh, yeah. Huh. Yeah, you can see it here. We had it planned out too. My guess would it would come back and test the monthly central. Oh, well, we missed it by, you know, I don't know, 15 pips. Logic's still there, right? Role reversal, right? The interesting thing is it predicts, oh, look at that. Look at my predicted target, guys. So we have it here, 186 with an entry at 80. So that was a 600 pip projection. And we're currently up 400. So we're at, I guess it's 400 over 600, sorry. What do you think of that, guys? In at 180, after the breakout, after the retracement, and then drew it. Remember, nothing existed yet. Drew it, projecting a 600 pip move, and so far we have 400, 600. But more importantly, again, more importantly than the pips, do you understand it? Is it teachable? Can you learn it? Is it tradable? Was that a random walk? Was that lucky or was it logic? Okay. Look at the pullback now, because now we're trending, right? Can you see the buying opportunity there? If we head up here, guess what? It's going to pull back, and the next buying opportunity would be here. Until it stops doing this. It's like the range-bound market idea. It'll stay range-bound until it breaks. A trending market will continue to trend until it stops trending. So, for example, if you're in a series of, let's say, higher high, higher low, higher high, higher low, right? Higher high, lower low, lower high, that's a problem, isn't it? Well, the trend just died. Cool. So anyways, do you want to buy it at resistance, at a double top, at the monthly central? No, not I. It's a weekly at a monthly pivot cluster. Oh no, it's not a pivot. I'm sorry, that's the 1382. Just happens to be a monthly pivot just above it. Monthly R1. Oh my gosh. So we have resistance pivot at our conservative target. So yeah, time to take a walk. Would I buy it there? No. But you could fit this to this, and you know, I don't know. Maybe it does one of these things. Okay, all I know is I don't want to buy it now. How about this? A bear would sell it. At least a scalper would scalp it, right? Wouldn't you? Perfect scalp. Could be an interesting place for binary. Because if you're wrong, you're going to be really wrong, right? What happens if you're really wrong in a cash market trade? You short here using a Forex position. What happens if you're really wrong? You short trend. You can lose your shirt, right? But if you use a binary, your loss is predefined. You can't lose any more than what you've risked, the cost of the binary. So you could take a shot there and say, well, at least this is going to be respected at least a little bit. Then maybe it continues mission. So probably a safer scalp. Okay, let's do some Kiwi. You guys trading Kiwi? No? YJ is, Greg is, cool. Should I be concerned about the pivot profit zone, the weekly pivot profit zone? Yeah. But if I was a buyer, I'd look at this area here, which is the 21 EMA, and I'd look at this area here, which is a roll reversal. Should I be scared about the oscillator? Say, well, I want to buy it, but it's overbought. Is that a worry? It's not a worry. It's trending. Of course it's overbought. Everybody's buying it. Why wouldn't it be overbought? Make sure you use the right tools for the right market conditions. So if I were me, I'd mark this up here as a bull. This whole area could be very interesting. And if I'm a bear, boy, right? Boy, this could, you know, if I was a bear, you could look to sell like off a lower high. Okay. Now remember, people are going to want to hold this, right? Because the carry, it's the only carry trade out of the majors. Look at this big jump, pull back, boom. Then what? Pull back. Where did it pull back to? Right? The roll reversal area. Okay. Now, I think if you wanted up the short, it could be pretty good because I'm looking at this as a daily bear, a sort of a short zone for the dailies. Okay. And to draw it, you know, I would draw it like this. Someone on a higher time frame would be looking to do that. You wouldn't see it on a 15-minute chart or an hourly chart or even a 4-hour chart. But somebody's got that planned. Okay. It could be starting like today. Look what happened when we hit this area yesterday. Look. And it's pretty logical. Okay. It's about a 618. I guess depends on which. Yeah, it's perfect a 618 after that. I was born to trade for you. So, could be very interesting here. Could be very, very interesting. Play it smart. Remember to be careful today. News being released. What is it, 2:30? Be careful then. Look for a market to be extremely mispriced for a while. Sell high at resistance or buy low at support. Ideally, trade in the direction of your long-term technical trend, bias or fundamental bias. We've gone over an hour again. Sorry about that, but I really value my time with you. I hope you don't mind the distractions now and then. On Earth, may the pips be with you. May your profits be above average. I'll be here again tomorrow, 7:30 a.m. New York time, which is London lunch. Also, these videos are posted on tradersway.com and also on YouTube, youtube.com/c/tradersway. I'll see you tomorrow. Remember, if you want these sessions to keep going, fund your demo account with real money. Traders Way is investing in you up front because they want to be your trading partner throughout your successful Forex trading career, and they're willing to do these events to kickstart your success today. Pay it back by funding a live account. Cheers.